What if I told you there's a stock trading under $3 right now that's generating more buzz on YouTube than almost any other ticker symbol in America? A stock that Wall Street analysts say could triple, or just as easily go to zero. A company buried under $4 billion in debt, yet some traders believe it could explode more than 1,000%. And here's the wild part, it's one of the most searched stocks on the internet right now. Today we're diving deep into the most controversial stock of 2026, and by the end of this video, you'll understand exactly why millions of investors simply cannot stop talking about it. But before we go any further, let me be crystal clear, I am not a financial advisor, and nothing in this video is financial advice. This content is strictly for educational purposes. Always do your own research and never invest money you can't afford to lose. And if you're serious about learning how markets really work, make sure to subscribe and turn on notifications, because we break down complex investing stories like this every single week. Now let's talk about where this stock comes from. This company belongs to one of America's most iconic industries, an industry many people thought was completely dead just a few years ago. During the pandemic, this entire sector was nearly wiped out, and streaming services were expected to replace it forever. But then something incredible happened. In early 2021, retail investors on Reddit discovered that hedge funds had taken massive short positions against certain stocks, betting aggressively that their prices would collapse. Instead of backing down, everyday investors fought back. They organized on forums like WallStreetBets and started buying these stocks in huge volumes. What followed shocked Wall Street. Prices didn't just rise, they exploded. One stock went from around $2 to over $70 in a matter of months. Hedge funds lost billions, headlines went global, and the media called it the meme stock revolution. The company we're talking about today was right at the center of that financial earthquake. It became known as the king of meme stocks, and even here in 2026, people are still obsessively watching this ticker. So where does this stock stand today? As of early January 2026, it's trading roughly between $1.55 and $2.27 per share. That's a brutal fall from its 2021 peak of more than $72. In fact, the stock has lost nearly half its value just in the past year alone. Yet despite this terrible price performance, search interest on YouTube and Google remains incredibly high. Why? Because the believers, the self-described apes, haven't given up. They're convinced another massive move is coming. Looking at the numbers, the company recently reported third quarter 2025 earnings. Revenue came in at about $1.3 billion, beating expectations, but they still posted a net loss of nearly $300 million. Cash reserves have dropped sharply, falling from over $600 million to roughly $365 million. However, there's an important twist. In mid-2025, the company aggressively refinanced its debt, pushing out major 2026 maturities and converting some debt into equity. They reduced exchangeable debt by $183 million, buying themselves more time. The big question is whether time alone will be enough. And now, let's name the stock. We're talking about AMC Entertainment Holdings, the largest movie theater chain in the world. Before you scroll away thinking movie theaters are finished, hear this out, because the bull case for AMC in 2026 is stronger than most people realize. First, the movie lineup for 2026 is stacked. We're talking about a potential blockbuster year that rivals pre-pandemic highs. The Super Mario Galaxy movie hits theaters in April. The Mandalorian and Grogu arrives in May. Toy Story 5 releases in June. Spider-Man: Brand New Day drops in July. And then the heavy hitters, Avengers, Doomsday and Dune Part 3, both scheduled for December. Analysts project that 2026 could generate as much as $35 billion in global box office revenue, potentially making it the best year since 2019, the same year Avengers Endgame dominated theaters and AMC delivered strong results. If these projections hold, AMC stands to benefit significantly. Second, AMC has been innovating. They've partnered with Netflix for exclusive theatrical events, including the Stranger Things finale screenings around New Year's 2026. They've launched a popcorn pass offering 50% off daily popcorn through the end of 2026. They've expanded premium experiences like IMAX and Dolby, and revenue per guest hit a record $12.25 in the third quarter of 2025. Third, and most importantly, the balance sheet is not as disastrous as it once was. While AMC still carries roughly $4 billion in total debt, immediate bankruptcy risk has been pushed off the table. Some analysts now have price targets ranging from $7 to $12 per share, which would represent massive upside from current levels. But now we need to talk about the risks, and they are serious. That $4 billion in debt is still crushing. Even with refinancing, AMC continues to burn cash, reporting a $298 million net loss in Q3 2025, worse than the previous quarter. At this rate, cash reserves could be depleted in under a year if box office results disappoint. Dilution is another major issue. Shareholders approved doubling the authorized share count from 550 million to 1.1 billion shares, meaning future stock issuance could severely dilute existing investors. Since the meme stock peak, AMC shares are down 99% on a split-adjusted basis. Yes, 99%. The short squeeze argument has also largely collapsed. Short interest today sits around 6 to 8%, compared to nearly 40% in 2021. Without heavy short pressure, the odds of another massive squeeze are extremely low. On top of that, streaming remains a powerful threat. Netflix's acquisition of Warner Bros. For over $80 billion gives it control over massive franchises like DC, Harry Potter, and Game of Thrones. If more blockbusters skip theaters entirely, chains like AMC could face serious trouble. Most analysts rate the stock as underperform or sell, and sentiment indicators reflect fear rather than confidence. So what's the final verdict? AMC is not a traditional investment. It's a speculative trade, nothing more. If the 2026 box office delivers and AMC executes flawlessly, the stock could double or even triple from current levels. In a best-case scenario, prices between $10 and $15 are possible. But if revenues fall short, debt pressures return, or dilution accelerates, the stock could easily drop below $1 or face bankruptcy risk. The most realistic outcome for 2026 is extreme volatility, with the stock trading somewhere between $2 and $5, swinging wildly on sentiment and headlines. AMC dominates YouTube searches because it's dramatic, controversial, and emotionally charged, but drama doesn't guarantee profits. If you're considering trading AMC, treat it like a casino bet. Only risk money you're fully prepared to lose. Use strict stop losses, define your exit strategy, and never get emotionally attached to a stock or its community. And never, ever risk rent money or retirement savings. Remember, this is not financial advice, just market education. AMC is searched so heavily because it represents something bigger than a company. The clash between hope and reality, retail investors and Wall Street, belief and balance sheets. Whether it soars or crashes is still unknown. If this breakdown helped you, like the video, subscribe, and hit the notification bell so you don't miss future market analysis. And comment below, are you bullish or bearish on AMC in 2026? I'll see you in the next video. Until then, trade smart, not emotional.